XRP just did something it hasn't done in weeks, and if you blink, you might miss why it actually matters. Welcome to XRP Future Finance, the channel that cuts through the noise and gets straight to what the charts are actually telling us. Today, we're looking at a setup that has real traders paying attention, because XRP just bounced off a level that could decide the next big move for this token. There's one number everyone is now watching, $1.29, and what happens around it in the next few days could shape the entire summer for XRP. Stick with me for the next few minutes because I'm going to walk you through the chart pattern, the volume data, the ETF numbers, and the regulatory piece that most channels are skipping over. Let's get into it. Right now, XRP is trading close to $1.145, up roughly 4% in the last 24 hours. Spot volume is sitting near $477.5 million, and futures volume has crossed $2.19 billion. Open interest is holding around $2.54 billion. Those aren't just background numbers. That much open interest tells you a lot of traders have leveraged bets currently open, which usually means the next move, whichever direction it goes, is going to happen fast and it's going to be sharp. If you've traded through a squeeze before, you know exactly what I mean. Here's the part a lot of people gloss over. This bounce didn't come out of a calm market. XRP has been grinding lower for months, so this recovery is happening inside a chart that still technically leans bearish. That doesn't mean the bounce is fake, it just means it hasn't earned its stripes yet. The real confirmation only comes if XRP can close above $1.29 on a daily basis. Until that happens, what we're looking at is a relief bounce, not a reversal. It's a small distinction on paper, but a massive one for anyone deciding whether to buy this dip or wait it out. Let's rewind to how we got here, because the setup actually makes sense once you see the sequence. In late May, XRP lost the $1.28 to $1.30 support zone it had been holding onto. Once that broke, sellers took over quickly, and price slid down toward $1.05 by early June. That drop came with heavy volume, the kind you typically see when larger holders are exiting positions rather than just casual profit taking. That $1.05 level became the first marker traders started watching closely, wondering if it would hold or if there was more downside coming. Then, on June 26th, XRP dipped again, this time down to $1.0092, just slightly below that first June low. On the surface, that looks like more weakness, another lower low on the chart. But here's where it gets interesting. When price barely breaks a previous low and then snaps back quickly, that's often what traders call a bear trap. Sellers try to push things lower expecting panic, but instead buyers show up almost immediately. That fast rejection is one of the first real hints that momentum was starting to shift beneath the surface. The detail that actually makes this pattern worth talking about is volume, not price. That second dip to $1.0092 came in on noticeably weaker selling volume compared to the first drop in early June. So think about what that means. Price made a lower low, but fewer people were actually selling into it. That's a classic warning sign for sellers. It usually shows the selling pressure is running out of gas even while price is still technically falling. This kind of gap between price action and volume is exactly why chart watchers are now talking about a possible double bottom on the XRP chart. So here's the real question. This whole video is built around, can XRP actually clear that $1.29 neckline? This isn't some random line drawn on a chart for effect. It's the resistance zone connecting the peak between those two lows we just walked through. If XRP manages a daily close above the $1.28 to $1.29 range, that would technically confirm the double bottom pattern. And when that pattern confirms, the standard way to project a target is measuring the depth of the pattern and adding it above the neckline. That math points to a possible run toward $1.57. Before anyone gets ahead of themselves on that 1.57 number, there's real resistance sitting in the way first. XRP has to get through 1.17 to 1.18, and that zone isn't empty. The 44-day moving average currently lines up right there, and separately, Fibonacci retracement levels are stacking in the same range. When technical indicators cluster together like this, price usually doesn't just glide through. It tends to stall, chop sideways, or get rejected a few times before breaking free. There's also a holder behavior angle worth understanding here. A large cluster of XRP holders bought their tokens somewhere between $1.18 and $1.22. Many of those buyers have been sitting at a loss or right around break-even for a while now. And in every market, human behavior tends to repeat itself, People often sell once price gets back to what they paid, just to exit without a loss. That creates a wall of potential selling in that exact zone, something traders call supply overhead. So even a strong push higher could get slowed down considerably as price works through all that pent-up supply. Now let's talk about something that doesn't get nearly enough coverage in most XRP updates, the ETF flow data. XRP-linked ETFs pulled in $59.4 million in new inflows during June, and this marks the third straight month of positive inflows. That's not a one-off spike, that's a pattern building over time. According to SoSo Value data, this steady inflow trend shows real, sustained interest in getting XRP exposure through regulated products, even while the broader crypto market has been choppy and uncertain. What makes this stand out even more is the contrast with Bitcoin and Ethereum funds during the same stretch, both of which saw heavier outflows. So while money was leaving BTC and ETH products, it kept moving into XRP. That divergence is worth sitting with for a second. It suggests some investors see something specific in XRP right now that they're not seeing elsewhere. That said, daily ETF inflows on their own rarely move price in a big way unless they're paired with improving sentiment across the wider market, so this is a supporting factor, not a standalone catalyst. On the regulatory side, the Clarity Act remains a piece long-term XRP holders should keep an eye on. The major county sheriffs of America recently shifted their position on the bill from opposed to neutral after concerns tied to Section 604 were partly addressed. That section deals with protections for non-custodial developers under the Blockchain Regulatory Certainty Act, a detail that matters a lot to builders working in the space, even if it doesn't make headlines outside crypto circles. The story isn't fully wrapped up, though. The sheriff's group still wants further changes, specifically around funding and resources for state and local law enforcement dealing with digital asset cases. So this debate is going to keep running in the background over the coming weeks. For XRP specifically, regulatory clarity has always carried extra weight given its history with the SEC, and any progress here tends to shift sentiment noticeably in either direction. Pulling all of this together, here's the level map worth actually saving or screenshotting. Support currently sits between $1.00 and $1.13, and that zone needs to hold for this recovery story to stay intact. On the upside, clearing $1.29 opens the door to $1.40, then $1.88 after that. Some longer-term weekly projections stretch out toward $3.27, $8.17, and even $17.16, but I want to be straight with you. Those numbers only become realistic conversations after a confirmed, sustained breakout above recent highs. Treat them as a longer horizon, not a next-week target. So where does that leave things right now? XRP is showing genuine signs of strength with this potential double bottom, and the fading volume on that second low is a real, data-backed reason for cautious optimism. But nothing is confirmed yet. Everything hinges on whether buyers can defend current support and actually push through $1.29 with conviction, not just a quick wick. Add in steady ETF inflows and a slowly shifting regulatory backdrop, and this becomes a setup worth tracking closely over the next couple of weeks, rather than reacting to in a single day. Drop your price target for XRP in the comments. I read through most of them, and if this breakdown actually helped you understand the setup, subscribe to XRP Future Finance so you catch the next update the moment it drops. See you in the next one.